Hey, what's going on? It's Marshall back with Bids and Offers, and in this video, I'm going to show you exactly why you need to be incorporating order flow data to look behind the candlesticks like regular price action and understand what is truly driving the market, which is buying and selling. This is not something that is talked about often here on YouTube, and I want to be able to show you what is actually going on behind this candlestick chart, like this one, that drives these moves in the first place. So I'm going to go over these first two trades that I took and why I got stopped out on them, and then I'm going to go over these second two trades that I took that paid back for those 6 points of loss plus profit of 17 points. I'm going to go over my exact risk management protocol and my trade confirmations. But before I get into all the specifics of today, I want you to go follow my Instagram at Bids and Offers. If you are not following Bids and Offers on Instagram, you are missing out. There is absolutely a ton of value on here. I post trade recaps, I post how-tos, I post valuable order flow content. Make sure you're following this account so you can stay updated every single day. Let's just jump right into it. Today, early morning, we had quite a bit of chop. We had a first pop-up right off the open that got rejected. We sold off a little bit more, popped up again, rejected. And so far, this whole morning, until about 10:15, I was viewing the market in kind of a state of balance. And the market was slowly selling off. The highs were getting lower, the lows were being broken, and right in here you can see that I sold the market at these 21s and I got stopped out at the 25s. I'm going to show you what I saw on my screen in order to confirm this first trade. So here was the tape activity. This is on the Bookmap. If you want 20% off Bookmap, the link is in the description. This shows me the active ticker tape, these red and green bubbles right here, which is market participants hitting into these passive orders. The passive orders are these are offers up here and bids down here. Bids are passive buyers and offers are passive sellers. Every buyer has to buy into a seller and every seller has to sell into a buyer. So this is the actual tape that is driving price action. So what I was noticing in this morning chop was that this pop-up got defended pretty nicely by sellers here, and then these two pops here also defended right in the center of this zone, right exactly where this large offer came up earlier for 600 contracts. I noticed that buyers were having a struggle getting above these 35s, and when I zoom in and scroll over to where I got short this first trade, my thesis on this trade was a breakdown of the low of day. The buyers popped it up and failed to get the market back up above these previous lows that the market had put in where sellers had failed. So I was validating the selling pressure, and I actually got short on this second pop up right in here at 10:15. It sold off briefly, and then the buying just came in pretty aggressively and popped up right up into my stop here. So that was the first trade of the day. It was just a low of day breakdown, confirming it with the order flow, finding aggressive selling beneath that previous low of day. I'll show you the volume profile, auction market theory perspective on that trade. As I was watching the market sell off, we get below this low volume node and the market pops up to those 22s and rejects right at the bottom edge of this low volume node, and the order flow tells me in the moment that sellers are aggressive, and I was looking to short a move down into these 15s and 710s, but that didn't work out. The market popped back up, so that was just a trade that simply didn't work out. There's not too much for me to note on that short. Now let's get into the second trade. So once I got stopped in here at these 25s, I noticed that the market had actually been supported in this move all the way back up above these previous highs that allowed this new low of day to come in. So it looked like a turn of the tide to me. What I wanted to see was a clean, strong break above these 33s right here, which we actually did have happen here at about 10:21. We popped up above this high and we actually pulled back, and something that I was looking for was to see if these previous highs here could act as support where these aggressive buyers lifted the offer through these 33s. On this pullback, what I was looking for was selling failure here, and we actually did get some selling failure at these 32s, and I hit the market long right in here at these 34s on the reclaim of this second dip. So we dipped, sellers kind of failed here into this bid, the market popped up, held that area of consolidation, and then on this rally up, I got long right here, targeting a move up towards the 40s and then 50s. But what happened here is we popped up and the buying actually got slightly less aggressive. We had less volume coming in on the ask, and the sellers slammed this right back down. This was a trade that I was willing to take off very quickly. Seeing how quick this rally had come in and price got lifted very aggressively, I was looking for this dip to hold quick and the price keep moving up above this high very quickly. So I cut this trade for a 2-point loss immediately right here at these 32s on this sign of aggressive selling. I did not want to see this happen again. Yes, this dip could have held for another pop-up, but that's my risk management. I did not want that to go to a full stop, especially after taking that full stop earlier in the morning right here. Let's get into the two shorts that paid for the 6 points of loss that I took on those first two trades. Also, extra 17 points. The first short that I took was right here at 67.38.5. Now, my reasoning for this trade was seeing the buyers fail above this high of day. So anywhere above the 44s, the buyers failed. There was a large positive delta up at that high. And I noticed that this sell-off had gone all the way back down into the center area of value on the day. This is a volume profile. This shows me all the volume done from the start of the day at 9:30 all the way over to current time as soon as I got in that short. So what I was noticing was buying that was failing above the value area high. So the value area represents one standard deviation of volume range on whatever time length you're looking at profile. So I saw trapped buying efforts up here at these 40s, just above these 40s. Here's what it looks like on the footprint chart. You notice that there is some green positive delta up above this high here into this area where the sellers drop the market out of those 50s quite aggressively. You notice that there's not as much volume being done above this high, signaling that the buyers may not want to aggressively lift the market back up towards those 50s. Right in here at about 11:23 on this move down, clean fake out of that previous high. On this aggressive selling, I got short right here at these 38s, and I put my stop up here at these 41.5s. I'm going to show you what this looked like on the book map. So the market sells off, we pop up right here, and right in here was where I was looking to get short originally, around these 42s. We popped up above this high, the buyers failed, and this very large offer for 500 contracts appears here at the 67.45s. Notice what happens as soon as this offer appears here. I'm going to scroll back. So the market's popping up, we're popping up, and that offer appears. Buyers immediately fail, and sellers get much more aggressive in their efforts to drive the market down. Right in this area at these 38s, seeing the sweep by sellers, I hit it short right here. And basically my thought process was I'm going to put my stop above these 41s into the 42s, basically saying if buyers do get another pop up, I'm going to get out of this trade because I'm wrong. I want to sell the market because we just rejected this level as soon as that offer appeared. So what that tells me is that buyers got a little bit scared as soon as that offer came onto the market for about 600 contracts. And as soon as we pop up here and we fill this large offer for 600 contracts, and then again the offer pops up for another 500 contracts right here at these 40s, I feel like I'm in good hands. You know that Allstate commercial? I really felt like this trade was about to start running because buyers were failing even lower and passive sellers were really trying to keep this market down. So you can see that on the footprint right here, this 624 over 130, that was the offer being filled. And look, the market didn't pop up above that whatsoever, and we actually sold off all the way down into my target, which was originally down here at these 67.25s, but I actually ended up cutting my trade a little bit prematurely here at these 67.29s. I wanted to hold down to these 25s, but I saw some buying come in on the tape right here, and I was willing to cut the trade. What that looks like is this right here. So we drop through these 30s, and we get down to these 26s, and we actually start to pop up very, very quickly. In the moment, this looked like a very aggressive buying spurt that came up. I actually cut the trade right here at these 29s before it dropped all the way down to my target and then towards this new low of day. This trade was really solid. The only thing that I wish I did a little bit better in this trade was be more willing to hold into my predetermined target. Again, that was a zero print target, so those market misprints, an uneven transaction occurs on the bid or the ask, the market tends to go back and fix those misprints during the session. So that was an added confluence for my target on this trade. Now let's get into the third trade that I took. I very rarely take another trade after I take a full W, and I spotted this opportunity and I felt it would be kind of stupid for me not to take this opportunity up. The fundamentals of this last trade that I took today for a 14-point profit on only 3 points of risk was this. I got short right here at these 28s. My thesis on this was a negative delta break and retest. I'm going to show you what this looks like on the book map. Right here, we notice that there is a very large seller into a bid for approximately, I think it was 1,000 contracts into the bid right here. And then this bid actually pops up again, and it looks like it gets filled right here for about 300 contracts again, and the market moves right through that bid. No problem. No hesitation. Showing me that the sellers were really active and they wanted to keep this market down. On this pop back up into these 67.30s, I noticed that we are actually coming back up into this area where there was a large negative delta executed in the market at about 1106. So I'll show you what that looks like on the footprint. You see this 1167 over 29. This means that 1,100 contracts hit the bid here and only 29 lifted the offer. There was a very large aggressive selling into this bid that actually popped up. This could be considered a very quality level of absorption right here. So on the move back down through this level, I noticed that the sellers were active, and if I scroll forward, look at what happened on the pop back up into it. So we pop up, and the buyers can only get 2 ticks above those 67.30s here. So I noticed that the buyers get 2 ticks above. On the book map, this is what that looks like. Here's that large delta sitting at 67.30. Buyers pop it up, literally cannot get past that whatsoever. On the move down right here, on that clean rejection and inability for buyers to lift the offer, I get short right here at these 28s, and I put my stop right up here at these 31s, just above that high, 1 point above my key level, saying I'm wrong on this setup if buyers are able to pop it up above that level of negative delta. What I want to do is target the low. So I was targeting this low at the 67.12s to 15s. I got short right here, and this thing ran immediately. I got short, and it started dropping very quick. I went break even right in here at these 20s, cutting my risk. I took this trade off at the 67.14s right down here on this aggressive buying. I'll show you that execution on the 1 minute chart right here. So I sold at the 28s and I bought it back at the 14s for a 14-point profit. This was a negative delta break and retest. I go over this exact trade playbook in the order flow trading guide. That's going to be coming out very soon. The wait list is currently active. There's a lot of goodies in there. It's going to be awesome, especially if you're a new trader and you want to learn what drives price action in the first place. I go over all topics from risk management, order flow technicals, basic technical analysis, pretty much everything to do with the way that I trade. And I want to emphasize the things that have helped me the most and how you can use those things to accelerate your trading and avoid mistakes and avoid losses. I really like this trade because it actually was confirmed almost perfectly here at this level, and it ran right away. We popped up, buyers failed. I shorted because I saw this tape data in real time. I'm not waiting for a candlestick confirmation. I'm not waiting for some ICT strategy, liquidity, freaking change in state of delivery. I don't care about any of that stuff. All I care about is the buying and the selling. Are there people who are willing to lift the offer, or are there people who are willing to hit the bid? And where is this happening? Can I use this data to align myself properly in the moment with the trend in order to capitalize on it? That is what I emphasize in every single one of my videos, and every single piece of content that I put out is looking behind a standard candlestick chart like this in order to find buyers and sellers who are willing to defend certain price levels. I would not have been able to see this massive seller hit the bid at these 67.30s without the order flow. You can actually see that delta over here on the left side of my footprint at 67.30. This level, look at my cursor, my crosshair. Look at where the market rejected that to the right side. If you go all the way over, it rejects it to the tick, and the VWAP was sitting right there as well. So you put pieces of confluence together, you create a trade plan, and you execute. Your job as a trader is to show up every day and wait for your setup to sit right in front of you. You have a set criteria to put the trade on. You have confirmations, you have data, you have an invalidation point for your stop, and you have a reasoning for your target. Every single trade that I take has an exact system behind it. There is no guesswork. I know the data, I know what the repeatable setups look like, and I execute them day in, day out. I also take those trades in the live trading room. If you want to take the same trades that I do, you can take those in the live trading room. The link to join that is in the video description. Today's session was incredible. We made back the 6 points of loss and made 17 more points of profit after the fact. A bunch of members in the room killed it today, and what we emphasize the most is teaching you guys order flow. It's not some random signals chat. It is us showing you exactly how we take the trades in full detail. We show you our whole thought process and everything. It's a great resource for a beginner to get their hands dirty with order flow and start learning how to create your own playbook that you can use to extract profits out of the market. That is basically all I've got today. Follow me on Instagram. Check back soon for another video. I'm going to be trading tomorrow, so if I have a great day tomorrow, if I take some trades tomorrow, I'm going to make a video on those. Thank you so much for tuning in. I hope you get value out of this video, and I will see you in the next one. Thank you very much. Peace out. Have a great night.